Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the wild world of corporate finance, and today we've got Inland Real Estate Income Trust Inc., with a filing that has got some interesting shifts in how they handle repurchasing their own shares and a look at how their stockholders voted on some key issues. Stick around because we're peeling back the layers on what this really means for investors and the company. And hey, if you are digging these deep dives and want more straight talk on corporate filings, make sure you are subscribed and join our community. Over on Discord, the link is in the description. So the biggest news here is that Inland Real Estate Income Trust Inc., or IREIT Inc., as we'll call them, has officially updated their share repurchase program. This is basically the company buying back its own stock from investors. Now, they've made some changes to this program called the 6th SRP. What is different this time is how they're pricing these buybacks. If you have to sell your shares back to the company because of something truly unexpected like a death or a qualifying disability, they'll repurchase those shares at full price. This means you get 100% of what the share is worth. But if you are selling just because you want to cash out and you've been holding onto your shares for at least a year, these are called ordinary repurchases. Now you'll get 80% of the share price. Let's put some numbers to this. Based on their estimated net asset value, which is like the underlying value of the company's assets and debts, as of September 2025, exceptional repurchases will be bought back at $16.89 per share. That is the full current value. But for those ordinary repurchases, it is going to be at $13.51 per share. That is a 20% discount for selling your shares for non-exceptional reasons. Think of it this way: for every 5 shares you sell that aren't due to death or disability, you are effectively giving back 1 share's worth of value. Now, the company's board of directors still gets to decide how much money they'll spend on these buybacks each quarter. They'll look at the company's business needs and cash flow to make that call. They're planning to send out a notice about this new program to all stockholders by the end of December 2025. The document itself says this is just a summary and the actual program is more detailed. Alright, moving on to another key part of this filing. On the 17th of December 2025, the company held its annual meeting for its stockholders. This is where shareholders get to weigh in on important company decisions. First up, they voted to elect 2 new Class I directors, Gwen Henry and Bernard J. Michael. Both of these directors will serve for 3 years. Next, they ratified the choice of KPMG LLP as their independent auditors for the year 2025. This is the firm that checks the company's financial books to make sure everything is on the up and up. Then came an advisory vote on executive compensation. This is where stockholders get to say whether they approve of how much the key executives are being paid. It is non-binding, meaning the company doesn't have to follow the vote, but it is a strong signal from the shareholders. And finally, they voted on how often they want to have this advisory vote on executive pay. They can choose every 1, 2, or 3 years. It is important to note that a little over half of the company's shares were represented at this meeting, which means the decisions made have solid backing. Let's look at the numbers for these votes. For the election of directors, both Gwen Henry and Bernard J. Michael got a significant number of 4 votes. Gwen Henry received 5113239, 4 votes, and Bernard J. Michael got 5,118,022, 4 votes. There were also some votes withheld, which means shareholders chose not to support them. On ratifying KPMG LLP, the vote was overwhelmingly in favour, with 18,384,326 for votes. This shows strong confidence in the auditing firm. Now, for the executive compensation vote, things were a bit more divided. There were 4,364,779 for votes, but also 825,555 against votes. This suggests that while a majority approved of the executive pay, there is a notable segment of shareholders who have concerns. As for the frequency of the say on pay vote, the most popular option was to have the vote every 1 year with 48,4018 votes. This indicates shareholders want to have their say on executive pay more frequently. The company also mentioned they prepared a letter to their stockholders about this new share repurchase program, and that letter is included as an exhibit. This is a way to ensure all investors get the same information. And finally, as for the exhibits attached to this filing, we have the actual 6th amended and restated share repurchase program document, which goes into effect in February 2026. We also have the form of the letter that will be sent to stockholders. So what is the story here? On the one hand, Inland Real Estate Income Trust Inc. is showing a clear strategy to manage its share price and return capital to shareholders with its updated repurchase program. The differentiated pricing for exceptional versus ordinary repurchases is a key change. It makes sense to reward those facing hardship while also providing a clear discount for those simply exiting their investment. This could help stabilize the share price by controlling the supply of shares on the market. However, the advisory vote on executive pay shows some internal friction. A significant number of shareholders aren't fully comfortable with the compensation packages. This is something the board will need to address to maintain investor confidence. The preference for a yearly say on pay vote also signals a desire for greater transparency and direct influence on executive compensation. Overall, the company seems to be navigating its financial operations and investor relations with a mix of strategic adjustments and responses to shareholder sentiment. The share repurchase plan shows a proactive approach to managing shareholder value, but the concerns raised in the pay vote highlight an area that needs more attention. The company's direction appears to be focused on controlled growth and shareholder return, but improving communication and alignment on executive compensation could be a key opportunity for them moving forward. Alright, that is our breakdown of Inland Real Estate Income Trust Inc. Its latest filing. What do you think about their new share repurchase program and the stockholder votes? Let us know your thoughts in the comments below. If you found this video helpful, hit that like button and subscribe for more corporate insights. And don't forget to check out our Discord in the description for more community discussions. Thanks for watching, see you next time.